Hey guys, Keith Boykin here, Blackwell Realty, Jeff Daniels, Planet Home Lending, and we're going to talk to you about
the new credit reporting changes that will be affecting over 200 million consumers with Equifax, Experian, and TransUnion. So basically, if you've applied for a mortgage or you had your credit pulled, you've seen previously that medical collections are showing up on the report, which is then dropping your scores. As of July of this year, if you have a medical collection that is paid, okay, it's paid. Now, even though it's paid, it still shows on the credit report for up to 7 years. In July, they're eliminating that completely from the report.
which will boost your credit score.
Which should boost your credit score. Also, if with the new medical debt, right? So if you get a new medical debt, right, you go to the doctor, you pay your copay, you think your insurance is going to cover it, and then next thing you know, you get a bill in the mail from a collection agency. So that's going to change in July as well, to where now medical debt will not report to the Bureau up to 1 year.
So it was 6 months before that.
6 months.
And so now you've got another 6 months, it'll be a year.
Right.
All right.
Because based on, and all this is done through the Consumer Financial Protection Bureau, which basically went and looked, and the Mortgage Bankers Association, we've been fighting this in the mortgage business for years, as you know.
Correct.
We talk about it all the time. Medical debt is not a reflection of someone's credit, it's life. Life happens. You go to the doctor, you get in a car wreck, you get hurt on the job. So this is finally coming to fruition after all these years, and basically what the medical debt is in the United States is $88 billion of medical debt.
That's a lot.
Right? So this is going to affect over 200 million consumers. And it also, little notes here, it will, and then in 2023, if you have a medical debt that's under 500, it will not report to the Bureau at all.
So with all that being said, what do you think that them dropping off, $88 billion worth of debt and affecting 200 million consumers, what do you think that'll do to their credit score?
Studies say it, even I read an article from bankrate.com, that this could affect credit scores up to 100 points.
All right.
So how many credit reports have we pulled, right? And I'm like, we got a medical debt that just hit, right? Consumer says, well, I had a 680 credit score. You're now at a 590.
Ouch.
Right? Well, that medical debt dropped your scores. Well, this is going to eliminate that from consumer scores dropping.
So you'd still be at the 690 then instead of the 5.
Correct. So this is huge, right? This is huge. I've been lending for 28 years. This is something that's going to change consumers' credit scores. Now, we still got to go to the doctor.
Correct.
Right? We still got to go.
Still got to pay the doctor.
Still got to pay the doctor. But now you have up to a year to settle whatever the medical doctors or emergency room or whatever that you're getting in the mail, you have up to a year before they're going to report it to the Bureau.
Alrighty then.
Right? So this is going to eliminate a lot of lower credit score consumers because of medical. Right? Now we're just talking about medical, we're not talking about any of the other debt, but this is huge. So my suggestion is this goes into effect in July. So, you can go to annualcreditreport.com. You can go to Credit Karma. You can go to your major Credit Sesame, Wallet Hub, Self, Chime, all these companies out there. And you can see if you have medical debt, and if you do, then it will see what happens to your scores, and your scores will go up. Now, why is that important? There again, higher credit scores means what? Lower rates.
Correct.
Lower rates means lower payment. You qualify for more of a home. So this is huge.
Especially with the way the interest rates have been here lately.
Right.
This helps out. This is just another way to help you out. Be approved for more,
Correct.
The way the interest rates have been going.
Correct. Low rates. We want low rates, even though we're in a very high rate market right now. It doesn't look like it's going to go back down. But at least you know you're gonna be in a position to get a lower rate
That is correct.
instead of getting, honestly, there's 6% rates up there right now.
Woo!
So this is why it's so important to get your credit. Get with me. If you have any questions, my number is 615-779-8926. I do help people fix their credit. Right there. But yeah, this is gonna be huge. I think it's gonna change the market. It's gonna help.
I think it
it's
will
gonna help
too,
everybody.
yeah, because everybody has medical debt somehow, some way. So this will help everybody, like he said, with the interest rates the way that they are right now, every little bit helps. Any which way that you can get your interest rate lower right now is the best way to go about it. I'm Keith Boykin. You can call me at 615-788-9356. Jeff did help me get my credit score right. He can do the same for you. Jeff?
You can reach out to me, 615-779-8926. Also, keep this in mind. Always, have your credit looked at least once a year. And, in all the bureaus, Equifax, TransUnion, and Experian, you can get a free bureau every year. Doesn't cost you anything. But know what's out there. Be aware of what's out there, so that when you're in a position and you're ready to purchase a home, that you're gonna get the lowest rates on the market.
That's right.
You guys have a great day. Talk
Thank
to
you
soon.
guys.